that we continue in the form of the panel. So Cyril will moderate the panel. You can take your place. The panel will be challenges of setting up a social impact venture fund. And we are having 3 people here. I would like to ask Mathieu Cornieti and to introduce him to you. He is the CEO of the fund who has already received the investments from the EIF. So he will share his experience. Then we have Elemer from Budapest, Elemer Ester. He is the CEO of Portus Buda Group. This is a fund that has just been approved by the board as a partner. So Elemer will tell us what are the next steps and how did the process go. And I would like to ask Srđa. Srđa Iveković is my partner. We are the Feels Good Capital Fund, and we are in process of getting to the point where Elemer already is. Cyril, it's up to you now. And please be open with questions.
Thanks, Renata. Thank you. Switching from the previous broad presentation on what are the financial instruments we are managing and how we can effectively support the market, it is good now to switch to real life type of cases, sticking to what an impact fund looks like nowadays in Europe, and what are the main challenges, the main opportunities around raising and managing an impact fund. Just to start, in our view, and then you will be able to also share what are your views, what is your experience in this respect. But basically, we see our role on the market as EIF investing in impact funds on the market around 3 core ideas or value add. First, obviously, is the facilitating the fundraising. That means the capital we are bringing in the impact funds. We can invest up to 50% of the fund size, so we are also committed to make a substantial investment in individual impact funds. Next to it, and next to the challenge of often operating in a suboptimal type of capital or critical mass, is the institutionalization of these funds, because our long-term view is that we will be successful if in the long term the market no longer needs an investor like EIF, and that private investors can on their own invest in this market. That is clearly our long-term goal. So that means when we invest, that's a lot of institutionalization around that, around the reporting, around the valuation of the portfolio company, around all the processes that have to be in place in the team. And finally, closely linked with the impact market is the measurement and the role that we take with you in how to measure the impact and how to monitor this over time. So, because we are also dealing with a very diverse market, Srđa, you're based in Croatia, Mathieu in France, and Elemer in Hungary. As Renata mentioned, we are an investor in Mathieu's Cornieti's fund, Impact Partenaires. We have had a board approval and are about to sign an agreement with Elemer in Hungary, and Srđa is working in a team with whom we are in discussion to see how we can make an investment happen. So, Mathieu, would you feel free to, would you start describing your experience, perhaps on how challenges you face raising your impact fund?
The huge challenges we faced, and I guess my colleague will explain their own own difficulties. But actually, in France, we started with in 2007, which is a time when nobody was speaking about impact investing. The idea was just to help entrepreneurs, to support entrepreneurs, to face one of the biggest social problems we have in France, which are deprived urban areas, which you could call in other countries ghettos, where you have a huge unemployment figures, and where you, for a lot of, actually they were kind of business angels, 100 of great CEO of CAC 40, big behemoths, French companies, they decided to put their own money, 5 million euros, saying, okay, we need to support those entrepreneurs to create jobs there. We are going to support them with money, with capital, but not with just that, also with strategic advice and commercial opportunities. So that was the beginning in 2007, 5 million euros. Then we had a second fund, which was in 2009. So we had like 15 million euros to invest, and we did the job. We deployed that second fund in 5 years in 15 companies. And I can say that 7 or 8 years after the start of the investment of that fund, we may reach both a financial performance and a social one. I can give you figures because when I'm in the other side, I love when people say, okay, how much, what are the impacts? We help creating jobs for deprived urban people living in inhabitants there, but also for disabled people. And I mean, we respected the first aim of the fund, but we also reach financial performance, meaning that we should create a multiple of 2.6 on the portfolio. So it means a real financial performance. This is really important. I'm sorry it's going to take time, but this is the philosophy of how a private equity management firm. We need to generate a financial performance in order to believe that you have generated a social one. If you want to create jobs, even in deprived urban areas, you need to have companies who develop. And if your company develops, it means that they create jobs. And they create also value for shareholders. So the second fund was kind of a success. And thanks to the EIF, we changed of scale with a new fund, number 3, which is 44 million euros, and that we've invested in 17 companies. And last year, for instance, we have invested in 8 new companies. We invested in 4 companies and did 5 exits. So this is, I mean, 10 years after the beginning, this is where we are.
Yeah, that I think that also illustrates, I mean, how you have been able to invest in 8 genuine impact companies in a year. How, Helmer, because you're preparing the launch and the closing of the fund, I guess you also must be working quite a lot on the deal flow and identify a clear view on what are the companies you would be investing in tomorrow when you are operational. But so how would you illustrate what is for you exactly, what is the investment strategy you are after, and what is the type of company you are after?
Thank you so much for Renato, for Mr. Baibars, and for everybody that I can be here. That's my first time here in the World Business Angels Forum. And I think business angel is a good term to start my short answer, because I started my career as a business angel. I invested in 2004 in a biotech company, and I think that the important part of the investment was that it became a special tool for help for motherhood. That's, I don't want to go into the details, just that the fact what I realized really quickly that money was not enough for me as a motivation to create something. It was important that the goal what the company will reach is not just a financial goal, not well, certainly it was really important that financially the company performed well, but it was another goal to do something good. That was an angel investor always operating as a smart money provider, and I think that was a part of this history. We decided 2 years before that we want to establish the first Central and Eastern European Social Impact Investment Fund. We have a strong background because we are operating a venture capital fund management company active in Hungary and in the CE region. We invested more than 20 million euro previously as a classical, only for-profit venture capital fund management team, and we have quite nice exits. But when we decided that we want to move into the direction of a social impact, it was not really a new coming or really a flash for us, because we as fund managers always keep our personal motivation or follow our personal motivation, what includes that it's not enough to reach profit, but we want to create something good for the society. Therefore, it was just an institutionalization of our personal way, because as you see, we had a lot of experiences in investing, in institutional investing, with all of the details what it means. We immediately decided that we are looking for companies in which the impact goal and the financial goal are next to each other, and that's I think the main sense and the main root of our investment politics as an impact investment fund management company, that we are looking for companies where the financial and the social or environmental impact is next to each other. That's a bit philosophical. Let's see how does it work practically. We already filtered more than 100 Hungarian and Central and Eastern European company. It was really important because when we submitted our application to EIF, it was one of the requirements that we have to show that we are already in a screening phases, that we have already a massive pipeline with companies which can provide financial and social impact as well. Well, we pre-screened those companies. And we started next to this activities. We started the fundraising. It was a long way to reach the decision of EIF and the decision of our other investors. But right now we are planning the first closing of the fund for April 30, and it means that we are already on a good way. Just how the pipeline right now looks like. We have more than 10 chosen company. Those are pre-screened and pre due diligence on a really low level. Certainly, if we are over the first closing, we start the heavy due diligence. As long as we are on the way, we are giving non-financial support to those companies which are already in our pipeline. I think that's once again something similar with the angel being to give strong non-financial support to the companies as well. I think briefly that's what I can assume for first.
So Mathieu told us earlier that on the previous fund you are looking at financial performance while investing in genuine impact companies of more than 2 times the return on the cost on the portfolio. Elemer, you are telling us that indeed also in Hungary those companies exist, and you see these companies that are not run by, I don't know, idealistic hippies willing to simply make impact, but also real, like developing real businesses that do solve recurring social issues. Thank you for that. Sergia, would you share also what's the history behind Feels Good Capital Partners, and how the idea of an impact fund for Croatia and Slovenia came up?
Thank you. So we are far away from the stages, I suppose, my colleagues to the left are. We are an early stage fund manager. Hopefully we will pass the due diligence one day. but the whole team basically grouped around our social entrepreneur, Renata, basically blending expertise, experiences from various segments of the requirement, both regional and financial experience for matching funds to EIF, but also venture capital and private equity experience required for the processes to run a fund. If I may go back to the three value-add components, basically that you mentioned, I think they're at the beginning of the story. One is the fundraising, or helping mobilize the private sector funds as well, which EIF does, and basically in countries like Croatia and Slovenia, where the financial ecosystems for SMEs in quasi-equity space are relatively weak. Raising a social impact fund without someone like EIF would be almost impossible. Which brings us to the second pillar, which is developing the ecosystem and hoping one day it will not require European investment fund support. The ecosystem is pretty lively, but again, lacking the institutionalization that you mentioned, and this is key to developing any ecosystem of venture capital or social impact investment. The third one, basically the measurable and explicit chase of impact, is something that we found that it's not so hard to get. It seems that a lot of companies and entrepreneurs are doing a lot of social good implicitly, without actually knowing it. So whether is it because they're employing above average disabled people, or because they're producing eco-friendly produce which requires less water, less energy, and fertilizer, whether it's because they're providing opportunities linking technology to education and basically spreading education, or whether it's access to finance by mobile or blockchain technology that we heard. So the deals are there. It's just institutionalizing the impact measurement and evaluation. The process itself should be managed in the terms of expectations, because if any limited partner like EIF, but also private ones or other ones, are going to commit money to a team, the teams should be ready to pass a certain period of time. For that, they have to be equally committed and aligned between themselves, so they don't run away at the first opportunity, but that they're consistent and persistent to closing the goal. So, although we are not there yet, I strongly believe that we will be in the coming months, or at least this year.
Thank you, Sarja. I'd like to also make the point, we often hear that that we are typically not a follower type of investors. When we do invest in an impact fund, we would really turn every stone and have some fairly heavy, let's face it, a due diligence process, heavy in terms of the detail we require before being able to indeed chip in 50% of the total fund size. Would you perhaps share freely with the audience what were for you so far and up to now the main difficulties when it comes to going through the diligence process of an institutional LP, such as EIF? Is it around recruiting the right team, identifying the right profiles, or refining, fine-tuning an investment strategy on which perhaps EIF had comments, or perhaps more on the sourcing of the market. Could you please share what was for you the most challenging side of the, let's say, of having a due diligence from an institutional LP? Please go ahead.
Just we were shaking hands with Element because we had a discussion yesterday about is those due diligence from institutional like EIF, is it painful? And the answers of Element was no, it's not painful, since it's you improve your process. So this is for us, for Impact Partenaires, this is when we speak about changing of scale, it's not just having more money under management. Now we manage 110 million euros for impact investing. This is thanks to the first and then the second due diligence process of the EIF, because you have to improve all your levels, all your procedures. We are now full AIFM, which means that we run the management company, the private equity management company, as, I don't know, Ardian or PIA does. I mean, we are fully compliant with all the best procedures, and this is the reason why we have now trust also from great investors who are interested in impact, but whereas not really, they can trust you, but it's better when you have all the great procedures and the support of the EIF, because the EIF, once the EIF is there, it means that you've done the best to give great reportings, to have a great reputation. Cyril spoke about the alignment of the carried interest on the social performance. This is really important. It's important for investors. It's also important for us, because now when we are looking for a co-investor in one of our portfolio company, we are looking on the EIF partners all over Europe.
You already mentioned why was it really important to go through on the whole due diligence thesis. Actually, for us, it was a really good experience to work together with the EIF as a startup in terms of social impact venture capital fund manager, because we, as I mentioned, we have more than 10 years background with venture capital fund management, but 2 years before we had no background with social impact fund management. Therefore, we started to go on this way, on this whole due diligence way as a startup, and we got a lot of non-financial support from EIF. It means that we always get the feedback, we always get some orientation that, hey, let's think about it, that was I think really useful for us, and as you mentioned, Mathieu, no question, it developed us as a fund management team. Plus, from the other hand, what was really good from EIF, that they provide us, well, actually they advise us to go to other fund management teams. We actually visited in Germany Bone Ventures and Ananda Ventures, the two same company like Mathieu's company in Paris. They are managing somewhere around 50 and 100 million euro as well, and we learned a lot from those two companies. What I think what was a really good part of this progress to go through on the due diligence and the development of the whole application form and all of the materials what we have to submit, was that we got a feedback that, hey guys, let's start to learn as much as you can, and we follow this orientation, and I think it was really valuable for us to develop our team.
Thank you, Sergio. Perhaps.
Yeah, I'd like to tie on to something that Elmer mentioned, which is great concerning this newly established social impact investment industry. You know, unlike venture capital or private equity, which has been around for ages, this is, as Mathieu mentioned, he started doing it when it was new in the market, and that was only 10 years ago. So we're only about 10 years into the segment. The good thing is, because it's so nascent, everyone is basically sharing their know-how. So we were at Eleanor's place last year, and it helped us with the process. It's great to have people like Cyril and Yvette who are championing new regions for us within the institution. But the most challenging is probably, although we understand the process takes time, the most challenging is actually you often find yourself as a potential GP in a vicious circle. So I cannot get the matchers to commit without a considerable amount of a leader, which in this case is EIB, or I cannot get a deal locked as a deal if I don't have money. So quite a lot of things are in a vicious circle, and maybe that's the most difficult to manage that.
So just one thing. Sure. What Cyril said is totally more than unusual. When the EIF can say that they can support our funds up to 50%, I mean, things cannot be more simple. I mean, this is it's tough, but it's tough also for the entrepreneurs we support. It's tough for everybody. But this kind of help, thanks to the Europe, to say, okay, we can put up to 50% of the fund. I mean, this is a really, really huge help. So this is, I think we cannot say that our job to launch to launch new funds is difficult. I mean, it's difficult, but not so.
Just one more really quick sentence that yes, it was difficult, but it was much easier to with the help of EIF who understand what is social impact investing. Because we have other investors as well, in Hungary, institutional investors, and it was not easy to explain them what does it mean really social impact investing. And I think in this case we come back to EIF's main vocation or goal that to help to this niche, to this whole investment niche, social impact investing.
That's good to hear. I think that overall, I mean, certainly the heart of our mission is to so-called catalyze private investments, and I think that's also why our processes and the quality of the interaction we have with our partners is also it's not, you know, being detail oriented, being nitty-gritty for the sake of being nitty-gritty, but that's the overall goal, is to basically provide some type of quality seal, I don't know, but at least make it very explicit to the market out there that these funds are not only credible fund proposals, but also genuinely set up in such a way that they are equipped to indeed achieve impact and indeed achieve a financial return. So that's really this professionalization type or institutionalization angle is key. Thank you for making the message. I think we are perhaps running to the end of the session. I don't know if we have time for some questions benefiting from the presence of fund managers here. If you do, please, Milan. Yeah.
Okay, we've invested in a company which is called Ecolotrans, and the entrepreneur come from deprived urban area near Paris. He launched his business, which is logistic for last mile logistics for food. Okay, and he did it with electrical trucks and refrigerated electrical trucks. I mean, something that nobody has never seen. I mean, a fridge on an electrical truck. And he launched it 7 years ago, about 8 years ago, when we invested in his company, he was doing 300,000 euros of turnover. When we exited last year, he was at 3 million euros of turnover. What was really interesting for us was the apprenticeship impact, because he hired 50 young people out of the educational system, out of the labor market, and he gave them, he taught them how to drive, how to deliver, and he hired them. He hired 80% of them in the company. So he creates jobs for people living in deprived urban areas, but we were targeting young people in those areas, where you have, for young male, it's 50% of young male being unemployed in those areas, okay? So we say, okay, we had a great social business and a great, actually, ecological, environmentally friendly business. We sold our 49% of the company to a bigger company, which is also a bigger logistic company, saying, okay, since in Paris, maybe you do not know, but we have a huge of more and more laws about environmental issues. This is the future of the logistic in Paris, and they allowed us to have a great multiple on the investment.
Just a quick sentence as an addition. I think that's once again a philosophical issue. If the impact is inherent part of the business, then you can sell the company. Just an example, in the 10 chosen company in our pipeline or pre-pipeline, we have a restaurant, hired only disabled people, mentally and physically disabilities. The restaurant is super cool. It's a good design, good food, and he has got such a unique selling point that, however, it's on the countryside of Hungary and really far from Budapest. In Budapest, in the capital of Hungary, there are a lot of conferences who are using this restaurant as a catering facility. However, it costs more to order the catering from the countryside as from Budapest. But they have such a strong, unique selling point. This is an example where impact can be inherent part of the business. And I think they will open right now 2 other restaurants, all around, one in Budapest and one other in countryside. And we already know who will be the exit partner for this. And we are pretty sure that this financial investor wants to buy it 2 years later. The only responsibility what we have right now, as in this structure, as a middleman, who is investing as a first step and who will sell their position later on to a financial investor. Our responsibility is to help to the entrepreneur to create such a structure in which the whole impact goal is cemented in, okay, is embedded, okay, is embedded. That's our responsibility to help them, and that's. But I think it's really not a wonder to sell a social impact.
That element. This is a real huge issue, because thinking about the exits when you have not invested yet. I mean, you need to have LPs like the EIF trusting you and trusting. It's not just a speech; it is what we've done. And now we can say, okay, we've done it for 5 times, investing, helping the entrepreneurs to develop their business, and then selling our shares. And the only point is that if the business is growing and is profitable, you always find a solution to exit and give the money back to your own LPs with a value added, social and financial.
Yeah, I just want to wrap up. Really, thank you, LMR, Mathieu, Serja, for being here. I think no matter the extent to which we present our product and we do this and we do that and we have nice charts here and there. I mean, this is real life. This is really your achievement. So yeah, thank you very much for being here. Thank you, Renata and the WBAF to invite us and to speak here. Thanks.